This is the London Fintech Podcast, brought to you by your host, Mike Ballerman, bridging the worlds of suits and t-shirts, of finance and technology, bringing you insights, stories, and inspiration from the golden age of opportunity and innovation happening in London right now.
Hi, this is Mike Ballerman. This is London Fintech Podcast, episode 131, brought to you in association with Smart Pension. And we're here to discuss a topic we've touched on off and on over the years, finance for social good, with Peter Briffett, CEO of Wagestream, who, to quote their strapline, help eliminate the payday poverty cycle by giving employees the flexibility to stream their earned wages into their accounts whenever they need or want it. But that mission in itself is a subset of a much larger one. In terms of doing good, it is all too easily forgotten in these increasingly noisy times that companies employing people, making a profit, paying taxes, or not in the case of the tech giants, and providing citizens with products and services they need are doing the ultimate social good. After all, the state spends 50p in every pound, and if businesses weren't paying tax and salaries, the state wouldn't even have that 50p. I doubt that anyone, for example, would think that last episode's guest Cedars are doing anything other than the social good. However, directly socially beneficial fintech aims perhaps to take that to the max by ensuring that products or services themselves, in addition, are directly socially beneficial. We covered this last in depth in LFP131 with Emmanuel Andelic of Squirrel a couple of years ago, who were aiming at doing a similar mission to Wagestream, but more with benefits payments, which at the time were being aggregated into a single monthly payment, which caused exactly the problems that Emmanuel spoke about. More recently and more specifically in LFP127, Tom McGillicuddy of Ticker spoke about Fintech to empower impact and socially beneficial investing. Monzo have been quite focused in helping those with various impulsive tendencies or other such issues, as I vaguely recall, not to spend all their money in one go. Anyway, if straight and narrow, plain vanilla FS can be very transactional, and some fintechs just seem to be in a hurry to become the new old school themselves, can others directly, as well as indirectly, help the poorer or otherwise more challenged members of our society? Plenty to talk about, so let's get on with the show. Hi Peter, thanks for joining me today.
Hi Mike.
So it's actually very appropriate in terms of all your doing good, which we shall talk about later. I'm very glad that you're not doing bad, which is that when I walked in downstairs, there was something over the door saying something like, I don't know, work, sleep, pray or something like that.
Well, it's a WeWork converted church. You're in a holy place. You're in a holy place of social good. Funded by Saudi Arabia, probably.
Okay, so holy good in Holborn, actually. And yeah. I was contemplating walking here from London Bridge on a rare moment where it's not actually raining. We have Icelandic weather these days. That there's a very strange feng shui about Holborn, really. It reminded me of sort of Douglas Adams' comment that if you're at Holborn, most of the people who are experiencing Holborn were opposite the tube station for this new London.
This is the centre of London, in my opinion.
There's a sort of very big north-south road, so lots of people are shooting off north. Lots of people are heading south, and then there's the one that goes west-east. Lots of people are heading east, lots of people west. So the vast majority of people experiencing Holborn are actually in a great hurry to go somewhere else. So there's very few people who actually turn up to Holborn like you do and actually sort of hang around.
Exactly. But I think this is where, if Brexit riots do happen, they will happen along this road, so you're perfectly positioned to watch that. But yes, Holborn is a place where no one wants to spend too much time. Just keep moving. But we like it very much, by the way.
I see. And in terms of an introduction topic, which is even more fascinating than doing good in the world, you were saying that you did some records in the world with a few friends of yours. Not of the musical nature.
No, this is the realisation that actually, if Guinness World Records, the amount of Guinness World Records to break on Earth are vast. So if you fancy becoming a Guinness World Record holder, it's not actually that difficult. So our village cricket club decided this was a great idea, so we set about sorting out a day. And we actually got longest run-up bowl ever. So our lead wicket taker started from the village 5 miles away from us and ran in. Well, we all had to have professional umpires on the pitch. We were all dressed in white, and we had to wait on the pitch in our positions for 20 minutes as he ran from village to village, turned up at the pitch out of breath, came onto the pitch, and the rule was if it was a no ball or wide, you're out, son, back you go, son. Back you go. And you can't order taxis where we live. Luckily, he got away with it and did the ball, and there you go. World record number 1 was achieved on a glorious summer's day a couple of years ago.
So that's probably why you remember it, because it was a glorious
Exactly.
summer's day.
It happens.
So
We've got pictures.
the implication is that the Guinness Book of Records is now as big as the Hitchhiker's Guide to the Galaxy.
Correct.
Talking about Douglas Haggans.
Absolutely, because they have an online version. Hoping that we were going to be on the front cover of the 2018 Guinness World Records was unluckily not the case. But yes, online we exist.
I see. So you're my first Guinness World Record holder.
Yes.
But your role in it was just to stand around, though, actually, thinking about this, deconstructing what you say.
I like to think I was part of something huge. But in reality.
Yes, exactly. We've all had that experience at various times. It's reflected glory. So in terms of less reflected glory, from what I saw in LinkedIn, you, like many other people, have had a career.
Yes, somewhat.
Somewhat, but you've done lots of things, and businessy things and entrepreneurially things and that kind of stuff. And how did that happen then?
Well, really, always been in fast growth technology companies. As with every 24-year-old, didn't have a grand plan. I'm not 24 now, by the way. But went to work for a company called US Robotics, which was selling modems at the time, if you remember those days, when there was that sound of ee or whatever, whenever you tried to dial up. And every 2 months we produced a new product, which was faster than the last product. But I got involved with that company purely because they were paying more than anyone else I could find at the time. But it was great. We got sold 3Com, big growth, and I just had a real, got in my blood really, fast growth technology companies. Can you make a difference? Can you build something big when there really is no rules around what you're doing? Can you sort of structure things, and can you develop a business out of nowhere? I find those things absolutely compelling.
And you've done it successfully once or twice, you mentioned.
Yeah, for the 80 times it hasn't worked, there's been 1 or 2 wins and good things, but you do learn over the course of time there's certain rules, there's certain things that work, there's certain things you need to make sure you're doing, which are all part of the learning experience, really. But yeah, I sold a company to Microsoft, which was a photo management tool over here, which got us sort of the best post-acquisition metrics in Microsoft history, and then founded Living Social in the UK. I'm in Ireland, and grew that from me to like 350 staff, 100 million P&L. So those were really fast growth companies and just really exciting places to be.
So one of the things I've noticed about the serial entrepreneurs, as well as having their own recipe for success, is that they're either extremely restless or crazy or both. So having become a sort of a multi-billionaire many times over and having succeeded many times over, you sort of drink pina coladas for 6 months or whatever, metaphorically speaking, and think, I'm going to do this all over again.
Yeah, I think so. I think there's I don't know how many I've always got left in me, but the excitement of building something and seeing that work and seeing that being successful is, I mean, I haven't been able to replicate that in any sort of corporate job, even when I've gone on, sold companies to Microsoft or Thomson Reuters, joined those companies, fantastic companies. They'd never let me in through normal recruitment channels. Because I saw, I got involved with them from an acquisition, but I just realised that wouldn't be making an impact there as much as I would if I started something new. So once it's in your blood, it's hard to stop.
Yes, I mean, there are sheep and there are goats, and to a large extent you're born a sheep or a goat.
Maybe.
I mean, some people just like to go with the flow, work in a large company, turn up, go home and that kind of stuff. And other people like to sort of prance around the mountainside, metaphorically speaking, of course. Right, okay, so before my metaphors have even greater failure. So all this socially beneficial stuff, I must say that in my dotage I'm getting ever more cynical, in large part because of sort of social media and the media and all this kind of stuff. And I think I mentioned that I saw over the weekend that under Boris Johnson, given the Tory leadership campaign, so-called Tories actually, most of them seem to be left of the Liberal Democrats. We don't have a Conservative Party. Spend seems to be the answer for most of them. Get that 50p up to 60p in the pound that the state spends. But anyway, I happened to notice that when Boris Johnson ran London, and he wasn't a notorious virtue signaller, the murder rate had halved, and now under this ghastly Khan, the murder rate and the violence has gone through the roof. I mean, I think 4 people were killed over the weekend.
They
or
were,
something.
Unfortunately, yeah.
It's just terrible. But Khan never does anything else other than virtue signal about how wonderful he is, and minority group that, and Trump this, and just it's all talk. Whereas actually everything's just falling into chaos behind that. So socially beneficial, I mean, in principle, it sounds good, and of course, I'm entirely in favour of doing good in this way. But let's just start with a little bit of sort of the cynicism around it.
No, I think you're absolutely right.
The UK signed up to something recently. I don't know if they've signed up to it or created it. It's one of the sort of May's legacy thing, which is we're going to obliterate our carbon footprint in sort of the next 15 years or something stupid. So we'll get rid of all of our industry. We will all have to require a state permit to go on an aeroplane and all this kind of crap. So just before we get into the subject as such, is there a sort of an extent to which a little while ago you said, well, we're doing socially beneficial things, and people say, oh, that's nice, that makes a change from just making money?
Yeah.
Or is it just cynics like me say, oh, you're doing something socially beneficial,
I think you can still make money by being socially beneficial. I don't think they have to be not related, but I think that you're absolutely right to call it out. There's no company on earth that won't at least market that they're doing good or creating an impact. I mean, I've never seen evil.com being created and people trying to market that, or most companies will at least try and, in terms of their marketing efforts at the very least, expose themselves as doing social good. And you can see that with every big bank, every big insurer, and they'll do various things. But the way that I would, to look at it is their core business providing a social impact on humanity or the globe? And is it measurable? Because if you cannot measure the social impact you're making, and it's not just, giving some of your, or having an offshoot of your business that may help some charitable functions, which are all great and meaningful, but is the core business having a social impact? And if it is it measurable? Because if you can't measure it, you're not doing it, in my opinion. I think that's really important for anyone that's in the social impact space, or certainly putting themselves about as a business that's creating a social impact. If you can't measure it, I would take that with a big pinch of salt.
Okay, so you get over this point, which is to disassociate yourself from sort of just bland virtue signalling by saying actually one sets a target, and for the sake of argument, we've raised 1% of the country out of poverty in the last 10 years or something like that, and our target's to do another 1%.
And publish it and make it clear and publish it to, either on your website or to your client base or just to the general public. This is how we're making an impact, this is what happens. And if you're visible like that, then at least you're showing that that's what your purpose is.
Okay, so that's making it real and not just sort of waffly. But in terms of definitions then, let's go into the definitions. So as we touched on with Tom in the impact investing episode recently, what is socially beneficial is something that is to a certain extent in the eye of the beholder. So I gave the example of Brewdog and that who are making better beer. Now, someone like me might quite reasonably think that making better beer is a social benefit, that people after a hard day slaving away for capitalists manage to go to the pub and they have a nicer pint.
Have a nicer pint, yeah.
Exactly. So under my definition, that might be the case. Whereas under other people's definition, let's take the climate change hysteria. I haven't actually had time to find out what really is going on with the climate the last 10 years, and it's like everything utterly polarised between people who think that the polar bears are all going to drop dead tomorrow and people who think there's nothing going on at all. There's no spectrum anymore. There's no kind of, I'm 40% for it or 60% along it. So how do you define socially beneficial?
I think that's a great question. There are thousands or probably millions of activities that can make a social impact of some description, so it's a very general term. When we first got initial seed funding from Fair by Design Fund, which was, their LPs being Joseph Rowntree, Big Society Capital, Barrow Cadbury, all those charities are set up with the primary goal of reducing the poverty premium.
And the poverty premium
premium being the more that lower income workers will pay for goods or services. So if you are a lower income worker, live in a certain area, you probably have to pay more insurance on certain things. If you haven't got credit that can get you direct debit, you'll pay more for electricity. You'll pay 3 times more for a phone if you're not paying on monthly payments, and you'll certainly pay a lot more for any type of debt if you haven't got credit. So that is the poverty premium, which is the more that lower income workers pay. So part of our social charter that we have in our articles is to reduce that poverty premium. And in our world, that means stopping anyone having to take a payday loan, stopping people paying overdraft charges. Very measurable type of social impact. That's how our business was founded initially.
I see. So from that perspective, one might say that sort of socially beneficial is just a euphemism, and in more simple Anglo-Saxon, this is using fintech and finance to help the poorer member society. To help the poor, simple terms.
What we're doing is income streaming, so we're allowing people access to their earnings in real time and helping their cash flow. That doesn't just help lower income workers, it helps everyone in fact. But when you're in a situation as low income worker and you can't get access to credit of any way, shape or form that's fair, then this is certainly something that can help you stop taking, having to ever take a payday loan, which is the worst thing anyone can ever do from a financial perspective.
Right. Well, we'll come back to Wagestream a little bit later and talk more specifically about what you're doing and how you're doing and what you want to be doing in the future. In terms of the socially beneficial as you're defining it, which is that you take, should we say, the demonstrably statistically disadvantaged members of society, and you and others try and do something to help that target customer group in a sense. Well, not in a sense, precisely. What's the landscape like? Sort of who's out there doing it? I mentioned Monzo as an example, and they, you see stuff on Twitter and all that, LinkedIn, and they've done quite a bit around, helping people with mental issues on their
absolutely,
and that kind of stuff. So there are plenty of companies that are doing a little bit as part of their overall offering, and there are companies like yours that sort of it's the whole thing. So what's the landscape? How is it organised?
There's a whole emerging trend which is great to see. So we're part of an association called Finance for Good, which is a group of like-minded companies that are trying to actually provide financial solutions that have merit and help people. Like, for instance, Dashley, who are allowing people to get better access to mortgages, making sure that those, 30 or 40% of homeowners in the UK are actually getting fairer mortgages, and they're not going into these, rates that leave them after 2 years. You've got Castlight that really look at affordability and how can you get better credit scores based on a huge amount more information than just the bog standard stuff that's out there at the moment, to provide people better access to financial goods and services. You've got us, which are all about trying to kill off payday loans, stop people paying overdrafts fees by giving them access to their earnings. So as long as you've got your core business is trying to make a better impact financially on people's lives, then that's part of the criteria. But there's finance for good, there's good finance, there's funds emerging with the sole purpose of funding companies that have these remits and these missions. So all that's starting to change. But I think if you look at the whole broader picture, family office money now, even pension funds are asking, whoever their investment management team is, what is the social impact of these investments? It's becoming more important for them, not just to get return on their money, of course that's their critical aim, but also, are we providing a social impact? It's now part of their investment criteria. And that's starting to happen, and as more as that wave comes, that's just a better world, because ultimately, people at the grassroots level that are doing seed funding are taking some of those aspects, saying, wait, is this business going to actually help people? Going to create a social impact? And if those decisions start getting made all up and down the channel, then it's definitely a better world.
So you mentioned Finance for Good. Is that a voluntary body, for example, like the P2PFA, where a bunch of P2Ps are in it? Or is it some sort of Quang Go? Is it some government-related? Or is it?
No, it's not government-related. It's a charity organisation, but it's set up as an association to allow anyone in the fintech space that has a social mission that is providing measurable social results to be part of that collective. And ultimately, that collective of like-minded fintech companies can go and get, try and lobby bigger businesses to try and either take on some of those tools and services, or get businesses to get behind that approach and say, actually, these technologies are really helping UK workers or UK employees. How can we use some of those tools? And it's taking advantage of what you said at the beginning. Most companies want to at least promote their social ethics. So if you can get behind Finance for Good in that way, then that's great, because every single company within that collective are actually trying to improve people's lives.
Yes, and you mentioned Roundtree before. There have been one or two notable examples, probably Victorian times and onwards, of companies, often from Quaker families, who saw their purpose as much about being social as doing business. So a notable example, when I grew up in Birmingham, I think it was Bourneville, it was designed by the Cadburys, and there was no pubs there.
That's unfortunate. Let's go back to Brewdog.
So going back to my obsession with beer, and Port Sunlight with Unilever back in the day near Liverpool.
They became extremely successful businesses, but took a huge amount of effort to ensure they were also providing social good and social infrastructure and a social fabric to their workers. And you can still see, as you know, if you're in Birmingham, you can still see those communities today. They are now, leading charities in the social space, and they gave us some initial seed funding because they really believed in our mission and what we were trying to do.
Yes, and the East India Company, for example, in 1600, or a little bit later because they hadn't had their sailors go and come back yet by then, they set up a sort of rest home for retired and knackered out old sailors and things like that. And before that, you had business was run by guilds around Europe. And guilds had, on the one hand, a sort of a business purpose, but on the other hand, they were social organisations, so you get together for feasts and all that kind of stuff, and you would also do good in your community. So there certainly has been a very, very long trend for business to do both. It's not like you're reinventing the wheel.
No,
here.
absolutely not.
What has happened, of course, over my career is with the sort of 1980s and the Reagan-Thatcher somewhat liberalisation. I won't say deregulation because it's led to more regulations than we've ever had in entire history. But this liberalisation led to a line of thinking which was, should we say, overly economic, which is that the only purpose of business is to make money. Now, as I started by saying, I think it's an extremely vital purpose. If business isn't there, then everything you use in your entire day doesn't exist, and people don't make money, and the money can't be spent on other things. So that bit is very important, but also it's very easy to forget the other bit. In a sense, it's almost a bit bizarre that you're sitting here saying we're doing some social good, because for centuries people would have assumed you would be.
No, it's absolutely, and I think you're right. I think the days of venture capital going into businesses and saying, look, here's this, I want 10 times that back, and I don't really care how you do it. Now the decision is, well, I want that money, yes, and I do want that multiple, but what is the impact here? And that is actually it's being made by the investment management team, but it's also being made by who backs them, which is the most important thing. If it starts at the top of the food chain from the pension funds, from businesses themselves who are funding those pension funds, and from family office money, that's where those decisions filter all the way down, and that's great to see. And you could say the Bill Gates of this world are helping that cause. Very rich entrepreneurs that are spending their entire life now trying to do good in whichever way they see fit with their wealth. That is also helping people understand that actually, there's a complete remit for this.
Yes, so maybe the pendulum is swinging slightly in the other direction, and as you say, that people realise there isn't a conflict necessarily between doing social good, whatever that means in whatever context, and also making the money. So you've got these organisations such as yourself that are specifically targeting customer groups who are less than average in terms of their advantageousnesses that they have. So what are the challenges then of trying to do what you're doing, which is to combine social good with making a few quid for your capital providers?
Well, it all depends what you believe. I mean, if you believe, we believe that, profit with a purpose is important. We still need to have a business that generates revenues that allow us to continue what we're doing. But we believe, certainly at Wagestream, that if you're providing real, viable technology that improves people's lives, and we look at it from how can we improve the business for the employer, how can we improve employees' lives, then ultimately money will follow you. I think it really is one of those things in life. If you're providing an impact for people and it's a positive impact, you will have customers that will continue to come to you. So that's how we look at it. But yes, of course, we need to make money, and we need to have a business that enables us to do that. We have investors, and we were lucky enough to this social venturing, not least with Fair by Design, but now Boulderton and Northstone are in, and we achieved the biggest social impact round in European history.
Which is how much?
40 million, which was our last round. And that has been possible because they all believed in what we were doing, but we also have a requirement to them to be a profitable business as well, which is part of it.
Okay, so you're not a charity. So if you were a charity, for example, with very deep pockets, you'd go to those people who are financially disadvantaged and actually need a weekly cash flow or even a daily cash flow, as it were, and you transform their monthly into that for free. As you're a business that needs to make a profit, let's say I'm a podcaster who gets paid at the end of every month, and being poor like all podcasters, I need my money the first week. You presumably have to charge for that service.
Yeah, we charge for having access to your earnings, but the good news is we charge the employee every time they make a withdrawal.
So employee or employer?
They're both of actually. So we started just charging the employees like a ATM charge every time they take money out, whether it's £1,000 or £100. But now we charge the employer as well. And the good news is we're seeing more and more employers pay for their staff to have access to this, so we don't have to charge their staff anything. We've had our first employers do that, and that's where I think the responsibility for financial wellness should lie, is on the employer should take responsibility for that, because the upside for them is huge with retention of staff and productivity and all the assets. So we're seeing more and more of that. So we're comfortable with that being the case. So if a commercial business paying for the financial welfare of their staff is something that we'd want to happen more and more.
And just in passing, on the issue of Wagestream, roughly how many clients, individuals or companies or whatever?
So we've got about 120,000 employees on the platform. There's about 50 different businesses.
Any podcasters?
Well, no podcasters, but we're quite happy to open it up for you. It's a situation that everyone needs. It's so think like Hackney Council or Casual Dining Room, the Café Rouge, Bella Italia, all the way to sort of just Rent a Kill, the PLC. So there's a lot of companies now understanding that if you can provide a type of service like ours to your staff, and you can stop them having to go into these predatory payday loaners that tend to exist in the last couple of weeks of a pay cycle, then you're putting your staff in a better financial stead. You'll retain more staff, and also there's other nuances around income stream where people do more shifts because you create this link between work and financial reward. But I guess from a very high level, not all credit is bad, right? I have mortgage, and people need credit to go and do things and have things, but there is some bad actors in the space that we're trying to get rid of, and we see it as a cash flow problem as opposed to a credit problem. And most politicians have got no one likes payday lenders, and they will try and seek to reduce the interest they charge. But are you actually resolving the problem? A lot of the problem for people comes from a cash flow issue, which is caused by a monthly pay cycle. And if we can provide technology solutions very efficiently to address that, then you've really put a nail in the coffin of people that prey on workers that are in monthly pay cycles. And I know that because, if not that we'd ever sit around and watch daytime TV, I'd hope, but if you did, you'd see at the beginning of the week of a month, there are no payday loan adverts on the TV. On the last week of the month, every advert is a payday loan advert because they know that's when people require their services and they convert more customers.
And I'm thinking in the 19th century again, which I'm spending too much time thinking of recently, that the usury laws, which were put in place by goodness knows when, centuries ago, were finally abolished. And the usury laws said you can't charge more than 6% interest. So presumably if you brought the usury laws back in today,
yes.
That would actually ensure that nobody ends up, officially anyway, paying 99% interest for the things. However, what it would mean is that a bunch of people can't get the credit because they're too risky to be lent money at 6%.
That's the trouble, yeah.
And therefore they go for the metaphorical equivalent of backstreet abortions or,
Yeah, absolutely right.
Pawnbrokers.
There's definitely an argument that those interest rates are so high because of default risk and credit risk and all that sort of stuff as well. But nevertheless, a lot of it exists because people haven't got access to the money that's owed for them by the company. And if you can make that available, then they will be able to get through a month in a better way.
And when we're getting to the stage where, in terms of what you're doing in the narrow context, companies are paying you to do it for their employees, the obvious question that springs to mind is, why don't they just do it themselves? Why don't they just pay people per day?
We suggest that every time we go in to see them.
So you can tell me the answer, but I would assume that the answer is that payroll is a very complicated thing because it's got tax and this and that.
Payroll is a beast.
Therefore, the chief executive can't say, oh, Mr. Briffett has just walked in, he's got a jolly good idea. Yeah. I tell you what, rather than paying him a few quid, why don't you just go and pay all our people daily? And they say, oh, sir, you don't understand how difficult that is.
Payroll is, in a large corporation, is a very onerous, admin-intensive purpose. It costs the business money because a lot of the systems are archaic. You have to compile multiple bits of data. You have to run, all the tax credit regulatory stuff, and it costs money because every company we deal with, and pretty much every company in the FTSE 100 outsources payroll to another company, which charges them a nice amount of money every time they run payroll. So the less times you run payroll, the less it costs you as a business. That's a tick for the FD. But also, in a lot of cases, not in all, but in a lot of cases, companies, the less times they do payroll, the better their cash flow. So the incentive for them to run multiple payrolls in a month isn't there. And therefore, UK companies especially have stretched out payroll as long as possible before there's a riot. It turns out it's about 30 days. And the less times they do it, the better. Whereas if we lived in the US, everyone gets paid every 2 weeks. There is no world in the US where anyone gets paid monthly. It doesn't exist as a concept. But in Europe, we get paid monthly. But it's a mix of cost admin and, payroll is a sort of sacred place in any company. Don't change it. Because if it pays people, the worst you can do in life is not pay people. And if you don't think, money's emotional, try not paying people and if you want to hear some emotion. So it's making sure that, they run a process or whatever. So it seems like they should be able to do it every day. The truth is no one will do that without new technology.
Okay, so reasons. This makes sense to me. In terms of where we're going in the future in this domain, what are your thoughts?
This whole sort of area of flexible working or providing flexible solutions, whether it's to employees or just consumers, is huge. I mean, we look at this a lot and understand that the 8 biggest companies on earth almost now in terms of valuation, if you believe their valuations, all provide flexible products and services, whether it's Uber, whether it's Netflix, whether it's Spotify. Why is it that the last bastion of inflexibility in a workplace is the people's pay hasn't been able to shift and is very stagnant and done in these set ways? But, working from home, flexible working options, all these other flexible benefits are being introduced in the workplace. This is just part of one of those types of things that would mean in our world, in 3 or 4 years' time, we'd hope it's unusual for anyone not to have access to your earnings in real time. We'll ask, if you ask an employee, it's the 17th of June now, anyone that's working for a company is given their company an interest-free loan on 17 days' worth of earnings. Is that fair if you're going into overdraft or having to take a loan? We don't think so.
Okay, and in terms of the overall sector, in terms of finance for good or fintech for good, what you're saying is that the most consequential place to make change would be with the investor. So for many of us have got pension funds and we've got money with so actually we're the investor, but it's really the institutions that actually sort of act as the investor. And in the case of pension funds, I think many of them are just trying, I suppose, to make as much money as they can. So how would you get the biggest change in society, which was presumably you'd need to be the government, which says that pension funds need to maximise the money for their pensioners, of course, but at the same time, it'd be quite nice if 50% of that or whatever was on things that were directly beneficial or something.
Yeah, no, and I think there's, work the government can do, certainly in terms of policy, is making that, like they have done for public sector contracts, and workforce sustainability and social impact, there's some criteria in there that needs to be matched. So, you could potentially, even if it was not a forced policy, but certainly that would allow you to have better press, better standing, is if you could make sure that investments were you were measuring social impact, and when they looked at high performing funds, one of measuring some of that impact was a critical component of that. Not just the return, but are you measuring social impact, and what could the government do to enable you to have better tax, something that makes sense maybe from a monetary perspective, but if it was a measurable requirement for investing, that would be really interesting.
This country doesn't have a government, and if we do, they're going to be sort of having problems.
In flux.
Trying to do one thing, let alone more than one thing at a time. Are there any countries that that are doing this particularly well?
No, not really. I mean, it's starting to emerge, but I don't think there's any real legitimate policy that's enabled it. I mean, it depends on your definition of how you want to treat free market, and if you want to make sure there's certain rules. But I think government can play a big part in whether not enforcing it, but putting us some meat behind it and making it visible that we're measuring these investments on a social impact basis. And if government does it, government invests a huge amount of money in a huge amount of things, they're starting to do it. So I think we're quite forward thinking like that. I don't know how much it's in the US, but it's quite a few of European countries will look at these things as well for their government contracts at least.
Interesting. Okay, so I hope all you listeners are doing something socially beneficial, even if just for yourself out there, or even if you're drinking beer. And before we wrap up, I'd like to thank my brand partners, Smart Pension, who are fast, secure and free. Check out their UK workplace pensions at autoenrolment.co.uk. So, Peter, we've mentioned Wagestream once or twice. And I quite like the point that everything's flexible these days, apart from the payment. So presumably, like if you're driving an Uber cab, you do rides, but you don't get paid per ride or per day.
So the only company on earth that we know that's built this themselves is Uber.
Ah, I've nailed it.
You've nailed it. Simply because that is a very supply and demand business, as you well know, and unless you allow drivers to get paid daily, they have issues with retention of staff and the incentive to do more rides. So it was a fundamental for their operational model of retention and supply and demand that they enable people to get paid daily, because that's how critical it is to people. And if you're a Deliveroo rider that comes out of a lecture at LSE, wants to do a couple of rides for Deliveroo and go back for an evening class, you want that money today. You don't want to wait a week. And if I'm waiting a week, I may not do those rides. So it's for gigs, certainly workers, I think it's fundamental. They should have access to the money they've earned in real time. So Uber have built their own, but for everyone else, our technology exists to help them do that.
So connecting effort and reward more directly, you're saying encourages more effort.
Totally.
So, for example, if I did 10 podcasts today and I made loads of money in the evening, I can buy lots of beer. I go, oh wow, that's great. I'll do 10 tomorrow.
Or you could go and pay for a bill or pay your rent or something. I mean, my son can go and cut the neighbour's lawn and get £10. There's a tangible link between the work he's done and the reward. And if he didn't get £10, he wouldn't go and do it, unfortunately, as much as I try to bring him up as a good person. So that link we see in real time. So we've had companies that have used Wagestream just for overtime because they couldn't fill overtime shifts. If you're a security business, for instance, that has a 24-hour rota, and now they've launched Wagestream for overtime, and people calling them up for more overtime, because as soon as they finish that shift, biometrically, log out the shift, then they can have access to that money. So their incentive for doing overtime is vastly grown. Even if it's, I want to do something with Mike this weekend, I'll do the overtime shift on Friday. Otherwise, I get paid in a lump sum on the 30th of June. It all comes at once. I don't really know. There's a link between all the shifts I've done and that is certainly not as clear. So making these things visible to people, that we do through our app and making sure they're making better decisions is really important, definitely.
Yes, and I've seen personally the opposite of that in terms of, using my Revolut or Monzo cards, which is, one's much more conscious of what one's paying if it goes ping on your phone.
Definitely.
And you can sort of see how much where you're at. Compared to the old school thing where I used my credit card and never had any idea. And every now and once a month, I get some totally random sum of money, go, bloody hell, how did I spend that?
Definitely, I totally agree. Making things visible, which an app does extremely well, your phone does extremely well, is critical for making people make better decisions. And if Monzo's doing it, Revolus's doing it, but all these new neobanks, including ourselves, are making things very visible to people. And the argument's always, for quite a few people we speak to, wait a minute, something like income streaming my staff will be drunk every night, or they'll go and gamble it away. The polar opposite is true. People make better decisions when you make things visible to them.
Right, okay, so for the millions of listeners standing outside your window at the moment, what would you like to tell them that they don't know about Wagestream right now, or what do you need more of?
Income streaming has fundamental benefits to a business.
And it doesn't, going back to the social point, it doesn't have to be just poor people.
No, absolutely not. In fact, financial concerns exist for all. In fact, we see higher levels of stress almost with people earning over 100k than the ones earning at 20, because people still have money issues. They will be different, but if we're living in a world where 55% of UK workers haven't got £250 in savings, it's certainly something that can really help, but it can help anyone. And we thought it would just be lower income workers at the beginning, but it turns out it's something that can be available to all. But I think the message is, you need, as an employer of people, believe that financial wellness is one of the most critical, if probably the most critical thing you can do to someone is reduce their financial stress, which is felt and is a stigma around people talking about this sort of stuff, but is felt very keenly among a huge amount of UK workers. And if you can do anything to reduce that, you will see the benefits as an employer. That's my take, really. So come and see Wagestream, and we'll tell you how to do it.
And by the sound of it, Fintechs should come and see you as well, because Fintechs will get better performance out of their staff if
Correct,
absolutely.
If they come and see you. All Fintechs need to take on Wagestream. It should be a fundamental right.
Right, on which bombshell? Thank you very much.
Thanks a lot.
Thanks for listening. If you have consulting, advisory/non-exec, or media needs in the FS or Fintech space, get in touch with me at mike@londonfintechpodcast.com.
We could sit in a vendor all day, watching the firelight dance, watching the firelight dance. We could walk in the mountains before dawn, watching a happy moonrise, watching a happy moonrise. Come away from the city, with the tarmac so dead and the people so sad. Come away from the city, with the faces so grey, with the pain of the everyday. We are wild like the mountains and the trees. Can you see what I mean? Can you see what I mean? We fit in between the earth and the sky. Kiss the city goodbye, wave the city goodbye, wave the city goodbye. The city goodbye. Watch the firelight dance with me. 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 Watch the firelight dance.